JLR sales numbers are coming in, and I think there's a China retail sales numbers, which is showing about a 4.3% growth at 38,519 odd units or so. I think we got the wholesale numbers earlier for last month, for the month of August, and that actually showed better growth as compared to the last couple of months. I mean, this financial year, April, May, June, etc., numbers, actual sales numbers have been pretty poor as compared to, the previous year or the same months, etc. In August, there was some pickup. The stock is turning up as we speak. 378 or so is where we stand. But more on stocks and markets in a bit. Let's shift attention to what's happening in the commodity and currency space. Manisha Gupta is here. Let's go across to her. Manisha, good morning.
Morning, and thank you so much for that, Prashant. Well, there are various commodities which are hitting their new multi-year highs. Gold, to start with, is trading at a new 12-month highs at this point in time. Not only that we have broken above $1,350 per ounce, but we seem to be making further inroads gains onto that one. We did see a high of $1,358 at one point in time as well, and there have been various factors, fundamentals, which really have been supportive for this. To start off with, the dollar index is at now a new 32-month lows. It's hitting a fresh lows versus the euro as well. And apart from that, it is the weather concerns as well. After Hurricane Harvey, it is now Hurricane Irma hurtling towards Florida, and the expectation is that the damage that this hurricane, which is the strongest in last 10 years, could be more than $100 billion for US there. So that clearly is pulling the dollar down, and we have seen a safe haven currency buying come in because of that. The geopolitical concerns as well have been supportive. Markets are anticipating that North Korea is gearing up for its Foundation Day on 9th of September, and this is the day you could see yet another ballistic missile test from them. That is also adding up. And of course, the data that we have seen in the recent few days has nothing but been of disappointment, especially coming in from US, whether it's the jobs data or the inflation numbers, all of that less than what the street was expecting. In the metal space, the other metal that is doing extremely well really has been the copper prices. We are trading at a new 3-year highs on that. The prices have been gaining for 9 straight weeks now, up 19% now. And while it is the strong China trade data, strong China demand, if you look at the LME inventories, those have declined by 40% in last 3 months, and that in turn also has been supportive. Prathamesh Malia now joins us with his strategies on all of that. Prathamesh, hi. Let's start with copper first. And while we had fresh new gains here, at these levels where we already are up 19% in last 2 months, are you still buying?
In a best scenario, I would possibly avoid all the base metals because there's a lot of positive run-up that's already being seen in these counters. Although we are advising a buy side in this particular counter, 454 is something which we're really targeting at. But if you're really asking for the entire base metal trade, we would avoid any trade in this particular counter.
Prathamesh, how are you looking at the gold and silver prices? Because gold, while is trading at a 1-year high, silver prices also have taken off $18 per ounce on the higher side. Between the two of these, where are you looking at a better buying opportunity?
Between both these metals, I think silver would possibly fare better when compared to gold. 42,300 is what we are looking at immediately in this particular counter. However, in comparison to gold, 1,250, it has broken that mark again. The next possible momentum is 1,280, which is a possible momentum of around $30. In rupee terms, it turns out to be almost around 400-500 rupees from current levels. So in that sense, 31,000 looks very much likely in this particular counter.
Prathamesh, slightly for a longer term as well, while the gold prices, of course, have seen a run-up of $100 in last 1 month itself, at these current levels, for a slightly longer term until year end, do you think it still is a good idea to buy, stay invested, etc.?
I think if you're talking about risk and return ratio, I don't think it is a good level to enter. It has had quite a good better run up. 31,000 is a very high level to enter in. If possible, you can get levels at 30,000, 29,500 is something where one could possibly place their bets on.
Manisha, thanks very much. Prathamesh, appreciate you joining us and getting us those strategies. We will touch base again a little later. Okay, so back to the markets, not the secondary market. The primary market is also abuzz with activity. Issues are underway. New ones are being new ones are about to open next week, and more are being planned. The draft red herring prospectus for Hindustan Aeronautics, that is HAL, is being finalized and will be filed sometime during this month. That's the word coming in from T. Suvarnaraju, CMD of HAL. Speaking to CNBC TV18's Rituparna Bhuyan, he also adds that the company is looking to invest 17,000 crore rupees capex over the next 10 years. Listen in.
Right now, the consultants are at corporate office finalizing their draft RHSP, and we should be filing that by September. So that's the status on this investment.
So the valuation and all parameters are being decided by the is being evaluated by the consultant at the moment.
Consultant and at special committees which have been put on this thing, and we are well prepared, and then we should hit it sooner.
Can you give us an idea about the kind of orders that you have for your aircrafts and helicopters at the moment, both domestically and for exports?
Next, what to be made is the LCA Tejas, what you're seeing. We have an order of 20 plus 20 plus 83, the AON which is accepted, needs to be converted into a contract for HAL to make these aeroplanes.
You're talking about the HTT-40, which is an indigenously developed, in-house developed
basic trainer aircraft, which we've expecting about 106 aeroplanes to be produced in the next 4 to 5 years. And for as a new platforms manufacturer, we hope to get a 5th generation fighter project assigned to HAL. And a future, we are looking at a Sukhoi upgrade, the largest fleet which we have in India. That's 200 plus aeroplanes. We just concluded about 73 helicopter supply contract the last 29th of this month. And we expect another 200 ALH to be realized soon. So in the next 10 years, you would see 1,000 helicopters rolling out of HAL hangars. So this is my future business. So the numbers can be put anywhere. I would be looking around 1,50,000 crore order book in the near future.
1,40,000, and this includes your helicopter business, your fixed wing,
helicopters, LCAs,
right,
upgrades,
right,
follow-on contract.
Right. Okay, so give us an idea of the kind of capex then that will need to be put to ensure that this 1 and 1.5 lakh revenue stream, to service this revenue stream, what kind of capex needs to be put?
17,000 crores.
17,000 crores over the next 1 decade, or
1 decade.
would you agree to participate or partner with a foreign company?
Definitely, being the #1 aero company in India, and we have the required assets, we have the required skill sets. This lead we have is obviously puts in a position to participate with any aircraft manufacturer. Obviously, if someone wants to make an assessment of an industry in India to take a partnership, I think HAL would stand first.
Welcome back. Well, there has been a recovery which has taken place for Dr. Reddy's from the day's low. So it's down around 3% as opposed to an almost 4+% cut that we were seeing earlier. And you can see that visibly on the intraday chart. The other stock which actually is doing very well today is Larsen & Toubro. So that one is above its 50 as well as 100-day moving average. There's a positive report which has come out from Citi where they are reiterating their bet as well. So that stock now at the high point of the day. Ashwini Gujral is here with us to talk about the markets. Ashwini, over to you then. Let's start with maybe your thoughts on the top gainer and the top loser. Dr. Reddy's, the top loser, and L&T, the top gainer.
Well, there's nothing new in Dr. Reddy losing. So I think pharma bear market continues and possibly another down leg could start here. But there's no buying opportunity on this downside while it's come off the lows, but it's best avoidable. As far as the top gainer, which is the top gainer?
L&T.
L&T, yes, it's broken out and possibly this move could see follow through. Although infrastructure is still kind of patchy, I think 1200, 1220 immediately. Once beyond that, then maybe you could have another 100, 150 point rally, but that will need good results also. So I think Ashok Leyland is looking extremely good. That is also hitting fresh, 52-week highs. Overall, market remains sideways. In the morning, there was a short call which worked out. At this point, you should cover your shorts and get long, because by the end of the day, there's a good chance that market closes around same levels, 99, 70, 80. Is that sort of range-bound type market. So right now is a good time to get long. Individual stocks, several stocks are continuing their upside. Tata Global is at 210, Ashok Leyland. So a lot of stocks are moving up. Kajaria Ceramics, PVR. So there are opportunities on the buy side. First of all, Larsen is a buy with a stop of 1160, target of 1210. Kolte Patil is breaking into fresh intermediate highs. That's a buy with a stop of 195, target of 210. And LIC Housing is a sell with a stop of 670, target of 645.
L&T Finance is, I would just want to talk to you about that. You've recommended, Ashwini, that stock over the last couple of days on various occasions. Now, Kotak, the broker, the institutional side, they've put out a report essentially saying that it's run up too fast, valuations are untenable, and they downgraded their rating. I mean, I know you sometimes mix some fundamentals with charts. How would you look at this? I mean, it's done phenomenally well. There's no two ways about it. I mean, the only question is whether it can do more or it'll halt here now.
So has Kotak Mahindra. So
I know, yeah. But
that doesn't matter. See, either we could have been in Dr. Reddy and kept on losing money, or we could have been in Bajaj Finance. We are here to make money. And wherever money is getting attracted, that is where you should go in. I think L&T Finance, yes, corrections will happen everywhere. 15, 20 points it can lose. But I believe that this stock is just about starting to, warm up. You saw, Bajaj Finance from 500 went up to 5,000, then the stock split, etc. Stocks are compounders. Who is Kotak to say it's run up too fast? And what is the measure? Is there a speedometer? This is a frenzy. This is mob mentality. Whatever works, more and more people will keep on getting attracted to it. So, yes, thanks. Because of them, maybe it's correcting. More people can get in. But I think NBFCs will continue to run up despite all sorts of doomsday predictions.
okay, in normal circumstances, I don't think one would encourage a mob. But in this case, Ashwini, you're saying better to be part of the mob making the money. By the way, it's interesting. What they're saying is, post the sharp rally, we downgrade the stock to sell from reduce with a price target of 165. Their earlier price target was 150. So they've taken up 150 to 165, and they're saying now they downgrade the rating to sell. Anyway, so that is L&T Finance Holdings. We'll see where this one goes. Let's get some queries answered now. Our first is from the first question is from Piyush. He has 500 shares of L&T Finance. Bought at 206 rupees. Okay, his time horizon is 1 year and wants your advice. I mean, bingo. Straight up, first query is L&T Finance. 206 is his purchase price, Ashwini.
See, the only problem is he's purchased it at almost the intermediate high. No problem. If it falls 10 bucks, add more. Keep on adding till 185, 180 holds on. So basically, you have a 20-point stop, and I wouldn't be surprised if it gets back up to 250. So use the decline to build your position.
Okay, well, we have a second question now, which is from Pratik Jaiswal. Ashwini, he wants to know if it is advisable to go long on ITC at current levels. What would you suggest?
See, ITC, the gas is out. Basically it was the tax run up, and now it's kind of at its 200-day moving average. Unless there are fresh triggers, I don't think ITC will make that move. So look to get into NBFCs or autos or consumption stories, things where money is getting attracted. I don't think money is getting attracted to ITC.
Okay, fair enough. We're going to let you go on that note, Ashwini. Thanks very much for joining in and talking to us and bringing us all of that technical perspective. Need to take a short break now. But up next, we're going to be discussing the fundamentals of the market. We have T.S. Ananth Krishnan of...
14 points on the Nifty. We are at about 9,943. The Sensex is up 30 points. Mid-cap index is up about 22. The Nifty Bank is up about 45 odd points or so. So that's where we stand as of now. We, of course, have, general lack of interest, I think, broadly across the board. The advanced decline is also indicative of that. Last 2 days, I mean, the market's been soft, but advances have far outnumbered declines. But today, it's more balanced, almost sort of split equally between both the sides. Let's bring in T.S. Ananthakrishnan, CEO of Varanium Capital Advisors, who's joining in to talk about what he's making of things. Anand, thanks very much. Great to have you here.
Thanks, Simon.
So let's just talk about the NBFC space. And I don't know if you've been in Bharat Finance or you own Bharat Finance.
We do have.
So it's been a good week.
It's been a good week.
A great week, actually.
So we've been holding it for the last 3 to 4 years. So it's not just been a short-term trade.
Okay.
So yes, we've been having it.
And how do you assess the prospects of it? I mean, it's like it's a stock where you talk to people. They say, well, you can buy it in 2 years. You'll make more money. It'll be a doubler. I mean, you reckon that is true in any way?
See, I think especially in the microfinance space, there is a huge bit of a kind of a difference in terms of whom, depending upon whom you speak. Yeah, you have the Equitas, the Ujjivan guys, and you have the Bharat Financial. While the previous 2 quarters, while Equitas and Ujjivan kind of were talking about a muted commentary, Bharat Financial was quite bullish. Now, whether that has got to do with the fact that a likely sale or potential sale was going to happen, but if you look at the rating reports rating agencies reports, the situation post this whole demon and all the dislocation and the agri waiver that you're seeing, it doesn't, at least in the short term, bode well for many of these microfinance companies. Bharat Financial has showed good numbers. We've been, from a disclosure standpoint, we've been having it. We still continue to hold it. We think there is obviously a good scope, but we'll have to go through a phase of kind of consolidation around these levels is what we believe.
I started with consumer finance. You took me down the road of microfinance.
Correct.
Let me pull you back into consumer finance.
Sure.
So Bajaj Finance, what are your thoughts now?
Another stock which we own in our portfolio. In fact, it's a significant. I mean, the growth rate's been phenomenal. They've been going at a clip of 27-28%, and essentially, it's been a dream run for them. And obviously they've raised capital, which obviously your book value goes up. Everybody keeps giving the same multiple of 3.5 times forward earnings, and you're seeing them ramp up in stock. But I think they've done a phenomenal job, given the credit process that they have. I mean, at this cycle, given the growth that they have experienced, you would have expected a higher NPA, or at least on the gross NPA side. But you're not seeing that, which is either a testament to the credit process, which is what we truly believe, or it's just a matter of time before they start to see numbers pan out. But at this point, we're not seeing any indications of such.
In the consumer finance space, any other name where you think is better in terms of valuation and maybe?
So Capital First is better in terms of valuation on a book value, but they're not growing at the same pace as a Bajaj Finance. Obviously, in the consumer finance space, the majority players are these two between Capital First and Bajaj Finance. Capital First has indicated that they could easily ramp up their credit growth if they decide, but they are more focusing on the quality of growth. I mean, I believe that it's just a matter of time where some part of the market share would be taken, and the likes of Capital First would be the ones who would potentially take. So it's an opportunity there.
Your view on maybe L&T?
Another disclosure that we do have L&T in our portfolio too. So we believe that we truly believe that in the next 12 to 18 months, the capex cycle will start to move on. All their orders will start to move on. All their orders which were in the Middle East, which were fixed price, fixed contracts, much of them have rolled off, so their margins should start to improve. Their order book have started to increase. So at the valuation that we see L&T is, we think it's a good buy, which is really the reason why we have it in our portfolio. But obviously, we've been having it for the last, again, 3 to 4 years in our portfolios.
Okay, Anand, we're going to leave it on that note. Thanks very much for joining in and talking to us. So that's the fundamental view coming in on the markets. Need to take a break now, but up next, the management of matrimony.com. The IPO hits the market on September 11th. The management will be joining in. We're going to be chatting with them up next. Stay tuned. As well at this point in time. So we're just about consolidating, and we have been consolidating for majority of that week. Of the week, it seems as though 99.50, 99.60 seems to be quite a cap on the upside. We had intraday highs of around 99.80 odd, 88 odd, which we didn't manage to surpass through the week. So it seems as though maybe 10,000 would just be a little bit of time away. But the IPO rush continues on the Lal Street. We have another one, BharatMatrimony.com. Its initial public offering opens on Monday, which is on the 11th of September, and the company plans to raise around 500 crores via the IPO. We're now joined by the promoter of the company, Murugavil Janaki Raman, who is the founder and the managing director of the company. Hi, thank you very much for taking the time out today. Well, just wanted to start with the valuations. There's some concern on the street that, if you look at your trailing basis, your PE is over 40 odd times. Just wanted to get a sense in terms of why you're working with such high valuations, and what's the future prospect for, say, FY18 then?
Look at in terms of the market opportunity, matchmaking is a very large opportunity. Around 60 million people are looking for a life partner. The category penetration has been around 10%. We are looking at what are you going to deliver in the future. Based on the Q1 numbers, the matchmaking at segment level run rate itself over 100 crores. So basically, looking at the valuation based on what are you going to deliver in the future. And also, apart from the matchmaking, we're also looking at the wedding services. Wedding service is a very large opportunity, still in a very nascent stage. It's a $54 billion industry. Basically, what we're going to deliver in the matchmaking with a strong operating leverage. Look at the matchmaking EBITDA margin. The matchmaking EBITDA margin last year was over 25%, which already crossed 30+% in the Q1. The strong operating leverage in the matchmaking business is true with any consumer internet company. Once you reach a certain threshold, the incremental revenue, contribute to the increase in the EBITDA margin. So all these factors going to, kind of helping us to get in my view, it's a fair valuation. So.
Okay. One of the concerns which have been raised about the company is that maybe there is some amount of earnings unpredictability. In fact, for FY17, I think if you look at your numbers, there's been a drastic improvement versus FY16. And that's, I think, because of a couple of one-offs when it came to legal costs, etc. So can you just tell us about what kind of earnings predictability you do have in the business, and whether this earnings volatility is going to smoothen out?
Yeah. As I said, the business has two components, matchmaking and wedding services. The matchmaking, look at last 4 or 5 years, it always operated at the segment level EBITDA margin of around 11 to 15%. The last year, the increase in profile, we had a 22% increase in profile. Thanks to the smartphone penetration, the mobile penetration, then ecosystem changes, the mobile ecosystem changes that are taking place in India, all these factors has contributed to the increase in profile. So basically, at the end of the day, what you are monetizing, if you get more and more users come to our platform, our ability to convert those free users into paid users are continually has been moving up. So basically, the more profile comes, the revenue also the increases. So last year, the increased revenue on account of higher profile growth, and also the reduction in cost. We had a couple of non-performing services which were shut down, including we had a dating app called Matchify, which we tried, it did not work out. We realized that India is a strong matrimony market. We shut down that app. Plus we also had a return gifts venture, Tambulia, which was shut down. Plus also we got some web hosting benefits of 4.5 crores because we had a contract, that contract got over, we got the benefits of the operating expenses as well. The combination, plus we also had a 240 retail outlets which were shut down, which was reduced to 140 outlets. All these factors has reduced the operating cost, plus increase in profile, increase in revenue. So you got the benefits of both revenue increase and operational cost benefit that has increased the EBITDA margin. If you're able to deliver more and if you're able to get more and more profile, we're able to perform very well actually. And also we can expect an increase in EBITDA margin because of the operating leverage in the matchmaking business. While the matchmaking always operated the EBITDA margin 11 to 15, the last year moved up because of the point which already explained. So that's where it's going to be in the future as well.
Mr. Janaki Raman, good morning. Prashant here. First of all, only about 1/4 of your, the people who are on your website pay you, right? I mean, you have some 30 lakh profiles, only 7 lakh profiles. 7 lakh customers who pay. And that has been growing at some 3-4% or so. I'm talking about paid subscribers. How do you get more people to pay you? That is point number one. Briefly. And second, if you can talk about, your average transaction value is about 4,300 rupees. How can you grow it? This is a market which is notorious for people refusing to pay. If there is an option, you'd rather not pay. And you see that in a host of other internet services, right?
Okay. Yeah, okay. Let me explain. First of all, I want to clarify on the 25% of people pay. Actually, it's not 25% of people pay. Last year, I had a 7 lakh paid transaction, which includes a first-time transaction as well as a renewal transaction. So it's not about that much percent of people pay for a paid transaction. It's basically when you get under free users, over 10% people go for a paid transaction, which you have a 3 months, 6 months, and 1 year packages. And people are not able to find a right partner. They keep renewing the subscription as well. The 7 lakh transaction includes a first-time transaction and as well as a renewal transaction. Someone who registered 2 years ago would have paid last year, so we cannot assume that all the 7 lakh transactions are from 7 lakh individual people. It's not the case. It's the multiple transaction would have happened from even a single person. So that's the first point I want to clarify. In terms of the transaction value, the 4,000 plus we're talking about, when you started this venture 17 years ago, we are charging at 300 rupees for 1 year. At 300 rupees for 1 year over a period of time today has become a 4,200 is the 3 months published price. So basically, we are able to increase the price over a period of time. Even look at the kind of money people spend on the wedding. On the average, people spend around 8 lakhs wedding, and the kind of money people pay for the matchmaking is still a small percentage. So we have been increasing the price, and we never add any dip in the number of people after for the paid subscription. So it's in a way the price inelasticity model. But having said that, we have been gradually increasing the prices, so we continue to do so. Yeah.
Okay, all right, fair enough. That point is taken. Thank you very much for joining in and speaking with us, and wish you luck for your IPO, which begins on the 11th of September. Well, on that note, we need to also wrap up the show. But before that, let's cut across to Utkarsh, who is in conversation with the management of Maruti.
To us, speaking about the comment by Nitin Gadkari yesterday, when he says that more than asking, you saying that I will bulldoze, and that was the verbatim words he used about usage of electricity vehicles. How do you really read that statement?
What he is trying to say, I think, is that this program has to be implemented. That's all.
But do you think that because
don't take everything too literally? But he means that we are serious about what we are saying.
But talking about the challenges, how easy or how difficult it's going to be because the kind of facilities you need from government, whether it's infrastructure, do we need more than really motivational talk?
Nothing remains hard if you have the will to do it.
So what are the major challenges do you really see, sir, in this regard going ahead?
Look, challenges of various kinds, we can't even visualize all the challenges. The challenge is of having an affordable car which will be acceptable to the customers.
Last question, sir. We are speaking a day before the GST Council meeting is about to happen. How do you really see the impact of the cess if it comes?
Sorry?
We're speaking a day before the GST Council meeting is about to happen, and on the infra side.
I can't anticipate the